Hey guys, welcome back to DCA. So, technical analysis is essentially a manifestation of human behavior displayed for us in a chart form. Pure price and volume technical analysis is often the best we can do when trading on the stock market. There's just no definitive way to exactly tell where any given asset is being held, in what quantity, or for how long individuals have held those assets. Today, however, I'm going to show you why cryptocurrency offers us a look at the distribution of investors that we could only dream of having in the stock market. The public ledger utilized by assets like Bitcoin allows us to perform levels of analysis that are simply vastly superior in many respects to pure TA of the Bitcoin price that you see commonly reported every single day on social media. So today we'll be looking at something called the supply age distribution, and I'll be showing you how this information can be used to assess very likely locations of both heavy support and heavy resistance. So if you're new here, my name's Jay, and it's my goal to bring institutional grade analysis of the cryptocurrency asset class to retail investors. So on this channel, there's no hype. We don't sell hopium here. We only look at the data. So if you guys like this type of content, don't forget to hit like and subscribe. You can also head over to the Discord channel where we do a lot of discussion of the macro picture of the cryptocurrency market. You can also sign up for the DCA Index Risk Model. So this is a machine learning algorithm model designed to identify likely locations of market cycle peaks as well as market cycle bottoms. So this model has been converted into a TradingView script, and you can sign up for that as well as the other TradingView scripts that I create and I release for free on the Discord channel. So with that said, guys, let's get into it. So first of all, let's take a second and establish what the supply age distribution is and why is it so important. As you can see here, this chart has supply on the y-axis and price on the x-axis. So this is quite literally telling us exactly how many Bitcoin are held on the network at any given price. So in other words, let's look at this example here. Right where we're sitting at around 46.5K, we can see that there are approximately 460,000 Bitcoin which last moved at this level. Now notice that the bars are different colors, and this is because we can go even further back and break these down by age. So we can see right where we're sitting at a price of 46.5K per Bitcoin, we have a very large number of these coins which are red or orange in color. And this is simply for the fact that you can see on this key here, these represent coins which are 0 to 1 day old in the very dark red, 1 day to 1 week old in the lighter red, and anywhere from 1 week up to 140 days in the lightest red and orange colors. So collectively, these red and orange colors are known as short-term holders. 140 days, I should note, is also not an arbitrary value. This is based on coin distribution studies which demonstrate that these individuals hold the asset for less than 140 days are much more likely to sell than someone who's been holding for more than that length of time. Following that 140-day threshold, individuals become significantly less likely to sell the asset. So this is all great that this can tell us where individuals are holding the asset, but what does it actually mean? Why does it matter? So there are several reasons for this, but let's talk about the most obvious reason. When you're moving through a price range, so let's say our price is moving from 40K up to 45K. We as investors want to know where we're likely to hit strong levels of resistance. So traditionally what people will do is draw support and resistance levels on charts, and that's fine. However, this is attempting to do something that this chart is literally showing us. The price TA is trying to guess where the holders of the asset are. However, with the public ledger, we simply don't need to guess because we know the answer. It's not hypothetical anymore. We see exactly where individuals are holding the asset. So if you're coming from say 45K up to 47K, and there are a lot of individuals holding the asset there, especially if they're longer term holders, you know you're very likely to meet resistance. Conversely, if you're at 45K and you're coming down to 40K and there are a large number of holders there, you're very likely to meet support at that level because you're going to run into a place where these longer term holders are unwilling to sell the asset as the price is coming down. So the sellers become exhausted. So what we can see is the price of Bitcoin is currently sitting at around 46.5K, and that we've been struggling to get above this 47K level. Now, if we look at the distribution of Bitcoin by price, this starts to make a lot of sense. We see that there are a significant number of coins being held right in this range. Now, the fact that we see a very large number of these coins being within this 0 to 1 day and 1 day to 1 week range, that's nothing unique. These very short-term traders make up a large percentage of daily trade volume every single day. So for the moment, we're going to discount these. But what we see is that there are more significant numbers of holders which now qualify in this long-term holder category of greater than 140 days. So we're talking about a significant number of individuals who have bought sometime within the last year to year and a half. Now, since we know that these longer-term holders bought sometime greater than 140 days, these individuals probably bought at some point in early 2021, near the top, near the April top, or later in 2021, at some point when we were on the run heading up to 69K. So now that we can see that we have a fair number of these coins being held right in this range at 46K up to around 49K. So ultimately, we have a significant number of coins right in this range. In fact, if we take the sum of these coins, we're looking at here in this 46 up to 49.5K range, we have 1.1 million coins. So naturally, given that many of these coins accrued in this level are being held by a mix of short-term and relatively newer long-term holders, we'll expect some of these individuals to be happy just to get out of the trade at their cost basis. Or in other words, to get out of the trade at even money. Now you can also see that if we include these short-term traders into this equation, the number of coins held at these levels increases significantly up to around 1.7 million coins. So we're talking about nearly 10% of the entire Bitcoin supply being held within a very narrow window. So essentially, anytime we have a large number of coins like we're seeing right now, this leads to a situation where it becomes rather likely that we'll come under at least some degree of sell pressure, which is, I think, exactly what we're seeing at the moment. Now, what we can do then is come over to this chart. What this is showing us is how many coins are being moved around by long and short-term holders, and at what prices these coins were last moved. So often when we see coins moving around like this is in order to position the coin for selling onto an exchange, particularly when we see a long-term holder move the asset. Now, if we look at the long-term holders here in blue, we can see that over the last 7 days, as the price has spiked up, we've seen some individuals who are considered long-term holders by definition, who've been holding for more than 140 days, who've sold coins that they bought above this 50K up to around this 60K level. However, if we look at this in relation to short-term holders here, we can see that almost all of the sell pressure is not coming from the long-term holders. It's coming from short-term holders in these 30K up to 40K levels. So ultimately, we're not seeing a significant amount of sell pressure from long-term holders, and that's a positive sign. This indicates that in spite of the macroeconomic uncertainty surrounding the markets at the moment, and a decent move in the market with Bitcoin moving up to around 45K when we were recently sitting at 35K and even lower than that for a bit, these longer-term holders have held firm onto their positions. So if we come back to this chart showing us where the coins are being held, I think a few things start to become clear. When we look at the various price levels of the long-term holders, first of all, we know that we're at a fair resistance level between 46 to 49.5K. However, take a look below us here, and we see that there's essentially very little of the asset acquired by longer-term holders in this range, between 41 up to 46K. Now, if we look at the price chart of Bitcoin, this also starts to make a lot of sense. Notice how every time we're in this range between 41 up to 46.5K or so, we just fly through this range. And this isn't new. This phenomena dates back to December of 2020. Each time we get into this range, we head straight up to 46K or we head straight down to 40K. So this is ultimately telling us that investors are not putting a lot of emotional meaning into this particular level. So we should continue to see ourselves head down straight to 40K if we head down, Or if we do go down, then straight back up to 46K if we're able to get back above that level again. So ultimately, if we're able to get above this 47K level, though, what this is telling us is that this level is very likely going to be a beautiful level of support for us. But for the time being, it's going to be a battle to get above this level. And ultimately, this level realistically heads up to around 50K. So if we're able to break above that 50K level, then it's very likely that rather than being a level of resistance that we're experiencing now, that will in fact become a strong level of support. Now, what about above that 50K level? Well, above that, you have pretty sparse resistance overall in the lower 50K levels. However, I think if we get back up to 56K, up to around 59K, then you're going to have an absolute battle on your hands again. And that's because if we look at these newer long-term holders who have accumulated in this zone, we see that quite a lot of Bitcoin was acquired here by individuals who thought that they were buying the dip that just never came back up. It just kept on dipping straight through 2021. Now, with that said, many of these coins, in fact, were purchased back in the beginning of 2021, which we can tell by the age range here. And these individuals actually did have the opportunity to sell at a profit in late 2021 when we went up to 69K. And in spite of that, this relatively large number of holders, they did not sell when we went up to those prices. So that's in fact indicating that these are potentially new strong hands who are becoming long-term holders. They're by definition already classified as long-term holders. However, given the fact that we got back to their cost basis, made a new all-time high, and they still held on, indicates that they are very likely the types of investors who are in it for the longer haul. So now the last thing we need to consider is the additional sell pressure that will likely come from one additional large group of holders. And this is the large number of coins which we've seen acquired by these short-term holders back here, back in this 36K to 45K range. So you can see that there's a large number of coins which have been acquired in this range, which have been held for about 1 to 3 months now. So while many of these coins may be eventual long-term holders, we're very likely to see that many of these coins are going to be sold, especially if we start going up to 50K, 60K, etc. So these are going to be creating additional sell pressure. So at the end of the day, what this age band price distribution goes a long way to show us is how the market is currently constructed. And it gives us a very clear idea of what we may expect going forward. So we'll very likely have a battle on our hands all the way up to 60K with very small areas of low resistance during that time because a lot of coins have been acquired throughout this range. So I don't think we'll see the price just shoot through these levels, particularly given that we know a lot of the more speculative type retail investors who often drive the price up on much shorter time frames, they're simply out of the markets right now. In addition to that, we're also sitting right at some key technical moving average levels. We're sitting just above the 20-week moving average and just below the 200-day moving average. So this is likely going to be a time where we see a fair quantity of volatility in these markets right now. So ultimately, as usual, this is why I personally dollar cost average into the market. Because when it's all said and done, I see Bitcoin moving higher. And moving higher significantly so. But on the shorter term timeframes, I'm not very concerned with what's actually going to happen because quite frankly, if the price goes down, that's fine. I'll continue my dollar cost averaging strategy like I always do. And if the price goes up, well, then I'll just simply dollar cost average less until we reach into the prices where I intend to start dollar cost averaging out of the market. So essentially, guys, I just wanted to give you a breakdown of the distribution of the market at the moment, give you an idea of why we're hitting resistance right at this level, and just kind of show you what we can expect going forward. It's not an easy road up to 60K. So there's going to be a lot of volatility through that time. You know, we're going to hit at least several more resistance levels. And quite frankly, we could even head down from here. But regardless, dollar cost averaging into the market, a long-term belief in the asset, I think that's the way to go. So that's going to be it for this one, guys. If you guys like this type of content, hit like and subscribe. You could also head over to the Discord channel. Like I mentioned previously, we do a lot of discussion of the macro level picture of the cryptocurrency asset class. And guys, until next time, as usual, see you.